Hello, welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPJPY, British Pound, Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis, and do check out the Forex analysis playlist on my channel for the analysis of other pairs. So let's get started. So this is the 4-hour chart of GBPJPY, British Pound, Japanese Yen in front of us right now. As we all know, this chart was in downtrend. Okay, the market was in downtrend for quite some time, and at this particular portion, okay, it broke the resistance, and right now we can see that market is going up. Therefore, if we consider the overall trend of the market, it may be towards the downside. Overall trend may be towards the downside, but if we look at the present trend of the market here, then there is no denial or there is no doubt that the market is extremely bullish. In my earlier videos also, I clearly mentioned that we must focus on these trend reversals. Whenever we saw that price is coming down, okay, or whenever we saw selling pressure in the chart of GBPJPY, we immediately saw that there was sharp recovery in the market, and I clearly told you before also that this clearly signifies that buyers are there in the market, and soon we will see a good trend reversal. And right now we can see that market is going up, and there is no doubt that this market is extremely strong, which means that number of buyers are much higher in comparison to number of sellers. Therefore, in this market we should only look for buying opportunities, because if you look for shorting opportunities, then my dear friend, you will be going against the trend. You will be violating the thumb rule of the market, which says follow the trend. And as we all know, yesterday there was Fed's meeting. Okay, there was Fed's meeting, and after the Fed's meeting, the price of USD is going down, because they have clearly told that inflation will be high in the coming weeks, and moreover, they also clearly mentioned that coronavirus or COVID-19 will be a part of our life, because there are new strains coming in every day. Therefore, coronavirus is not going away, so it will be a part of us for quite some time. As a result, US dollar saw selling pressure, and if we look at the chart here, we can see that dollar is going down. Previously it was in uptrend, it was in beautiful uptrend, but right now we can see that the structure of the chart has changed, setup has changed. So right now dollar is extremely bearish, okay, and we have a support here, but right now looking at the present selling pressure in the market, it seems that dollar will break this support and go below. Therefore, we can't be sure where the dollar will take rest, but it seems that, or it is very clear to us that US dollar is under the sellers dominance right now. So now right now the sellers are dominating this market here. And if we look at the forex sentiment meter here, then you can see that this is a forex sentiment meter. You'll find the forex sentiment meter on my website abhilashhazarika.com under forex 101 section. In the forex sentiment meter, you can see that 76% retail traders have taken short position, which means they are thinking that 76% traders are thinking that market will be going down, and whereas 23% retail traders have taken long position. And as we all know, 90% retail traders lose money. Okay. So do you think that you should take a short position in this market? Okay. Yes, you should not take short position in this market, because see, if there are 100 traders in the market, and out of 100 at least 80 traders are go for buying, and only 20 traders are sellers here. And if you are taking a sell order here, then you are siding with these 20 traders, whereas 80 traders are on the buying side. Therefore, it is wise enough to almost follow the trend, okay, because they have a higher chance of winning, these 80 traders, in comparison to 20 traders. Therefore, you should only follow the trend. Though the forex sentiment meter is telling that 76% traders have taken short position, but still you should just do the opposite because 90% traders lose money only. Okay, so let's jump to the chart of pound JPY and see what should be a strategy. So you can see that I have got two lines over here drawn on the chart. First and foremost, I would like to talk about this line, 151.55. So first and foremost, this line or this level is the support for the market. You can see that this level has a good chance of providing support to the market, and as I always say, we should always look for area of value before executing any order. Area of value means the best trading opportunity or the best trading opportunity. Suppose if you buy here, okay, if you buy here, then your stop loss will be here and this will be your take profit target. Your risk to reward ratio does not match, and market is extremely bullish. You should not short the market also. So area of value is always near the support only, and I have already said in hundreds and hundreds of my videos that you should always find the area of value, and area of value in an uptrend market is always near the support. This market is an uptrend, so your area of value is this support only. And if you look at the chart here, you can see that this level has a potential of acting as a resistance for the market. 153.50. Okay, you can see that this level may act as a resistance for the market, and moreover market is also in the overbought zone. Okay, and there is also a divergence here. Whenever we get a divergence like this, there is a possibility that the price will fall or the market will come down, and you can clearly see that this market is an overbought zone, and the risk to reward ratio is also not in your favor. There is also divergence. Okay, there are several factors that clearly points out that this is not the right time to go for a buy. So what you should do, you should wait for the market to come down to this particular level, 151.55 level, 151.55 level. You should wait for the market to come down to this particular level. Or on the other hand, okay, in case market comes down and it starts jumping again from in the middle, then also you can go for buy order. But right now this is not the ideal position to go for any order here until and unless market crosses this level, 153.5 level, with good amount of volume. That's a different chapter. I'll be telling you what you need to do tomorrow, but as of now you should just wait for the market to come down to either to this support level, okay, or in the middle, whatever, it does not matter. But market needs to come down, market needs to cool off, because if you trade here in the middle at the top, that there's a high chance that you'll be losing money. So see, there was a huge volatility in the market yesterday. US dollar saw seeing some heavy selling pressure. Therefore it would be wise for you to give some time to the market, give some time for the market to settle down. So if possible, just watch the market for the day and just wait for the perfect opportunities. So waiting is also a part of the strategy. So this is it. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care.